The numbers have just been released, and it is looking very good for silver. I'll explain why and how in this video as we explore. That's right, the CFTC has just released new data about silver speculative net positions. And this is a dramatic shift that we're seeing right now in the silver market I'm going to get into in this video. But first, I want to remind you of channel sponsor Summit Metals. They have an increasing selection of products over on their website, which I hope you will check out. Excellent customer service and improved shipping times. So check them out and elevate your wealth with Summit Metals. Now, the new data that has just been published just recently is giving us some indicators of where the investors are putting their money. And right now, it is a dramatic shift from short to long in some areas. I'm going to get into this, and this is another reason why I am bullish on silver. I just posted a video recently, the part 1. This is part 2, and I hope you will check that out too. That talks about the fundamentals of why silver is looking good from here on out. But as I get into this, I want to remind you that no matter what data come out, no matter how it's interpreted, the markets will be volatile. Silver's price will see setbacks. Let me repeat that. The silver price will go down again. It's volatile. It's a small market. It's very sensitive to market conditions and to the psychology of the market. It's incredibly important to understand that, just like with anything else. Although this year, silver has really traded like a good investment, far outperforming inflation right now if you bought silver at the beginning of the year. But nonetheless, right now, we're seeing a pretty big shift in terms of where people are putting their money. Some big investors, hedge fund positions and alike. I'm going to be referencing an article here from ainvest.com. In the wake of a protracted post-recessionary recovery, investor sentiment has been recalibrating towards assets perceived as inflation hedges and safe havens. That's right. In other words, they're looking at it more like a hedge and a safe haven rather than an investment. That's good. We as physical silver stackers should be doing the same because we like to protect ourselves against the losing proposition of the dollar. And the dollar, though, it is indeed something that a lot of people put their trust and faith in. And by the way, if you're a hardcore silver stacker, you do too. Make no mistake, because you need these to buy this. And in order to liquidate this, you're going to liquidate for these. So we have to put that into perspective. It's just that this is unsound money. It's bad money because it's losing proposition. It's losing value every single day. This is sound money because it preserves its value over the long course of time through the ups and downs of the market. And that's important to understand. Now, the latest U.S. Commodity Futures Trading Commission Commitment of Traders report for silver released on the 1st of August 2025 reveals a striking development. Non-commercial speculative traders have amassed a net long position of 59,407 contracts in silver futures, marking a 34.9% share of total open interest. This figure, the highest in recent years, underscores a strategic shift in capital allocation and signals broader implications for both capital markets and consumer-driven sectors. That's big news in and of itself. But there's more, because the surge in speculative silver positions reflects a growing appetite for assets that can offset risks tied to monetary policy, currency depreciation, and geopolitical volatility. Silver, often dubbed the poor man's gold, has historically served as a proxy for inflation, expectations, and industrial demand. The CFTC data show that non-commercial traders now hold 80,493 long contracts, which is 47.3% of open interest, and 21,086 short contracts, creating a net bullish bias. That's right. Now, could this mean that these traders, which, obviously, the big bullion banks, the 8 biggest of the bullion banks, have capitalized on the largest holdings of silver. But nonetheless, it's you and I that trade through those avenues, right? Individuals invest in the SLV and others. So, in a sense, we are driving it to a large extent, although understanding that there's a lot underpinning those markets, and when they have control of them, it really does mean that in spite of who else may buy, they may have more power than we like, and they can shift and manipulate. We've seen that happen with J.P. Morgan, for instance, but that manipulation works in both ways. But it does contrast sharply with commercial traders who maintain a net short position of 16,514 contracts, a typical hedge against physical supply chain risks. The divergence between speculative and commercial positioning highlights a critical tension. While producers and users of silver are hedging against price declines, speculative capital is betting on upward pressure driven by macroeconomic factors. Illustrates this dynamic with silver's 24% year-to-date gain outpacing bond yield declines, suggesting a flight from fixed income into tangible assets. That's right. So that's why it's looking good for silver. It's pretty amazing. Now, the rise in speculative silver positions is not an isolated phenomenon, but part of a broader reallocation of capital from traditional equities and bonds into commodities. Post-recessionary environments often see investors pivoting towards assets with intrinsic value and inflation-adjusted returns, the article continues. Silver's dual role as both an industrial metal and a monetary commodity makes it uniquely positioned to benefit from these trends. And I think that is amazing. And it really is true. Recognizing that dual role is something that is quite fundamental, and I've talked about that oftentimes. You know, the silver market is small, as I stated in my other video as well too, about the fundamentals of the supply and demand. And I think that is why people are reacting now. In some cases, maybe late to the game, but you know, people are paying attention to silver. Investors are paying attention to silver. Stackers are starting to pay attention to silver. There's some people, I remember very well, there were some that said, once silver hits $30 an ounce, I'm liquidating, I'm out. Well, I tried to speak out against that. I tried to encourage people not to jump ship, to stick with silver. Yes, if you want to sell some of it for whatever reason or another, but have a core stack. Stay with silver. Because silver is going to preserve your wealth over the long course of time, and I believe in it that much. And I'm very excited about silver, even amidst the pullback that we have witnessed over the last few days. Now, by the time you watch this video, who knows, the market very well may be open again, and we may see silver's price fall even further. But you know what? I think there is a strong enough support somewhere in the $30 to $34 range. I think $34 is the floor for silver, by the way, but I could be wrong. It could go lower than that. But you know, in many ways it doesn't matter, because I think it's going to be temporary, and I think we're going to see some semblance of a recovery. But notwithstanding, you know, when you hold for the long course of time, it doesn't matter what happens in between. You've still got your silver. We measure our wealth in ounces. That's right. We measure our wealth in ounces, not necessarily how it is measured based off of the number of these it takes to buy an ounce. And when you come to understand that, we can navigate and we can manage our positions through the market volatility of the ups and downs of the market, because we often get very euphoric when the price continues to rise and rise and rise, and I myself included, but nonetheless, we have to understand that there are times when the price is going to pull back some. Now, for capital markets, this shift implies a reconfiguration of risk premiums, as demonstrates the decoupling of equity markets from commodity prices has accelerated since mid-2024, while the S&P 500 has risen 18% year-to-date. Silver's outperformance indicates a preference for assets with real-world utility. That's right, over 10,000 uses of real-world utility, by the way. This trend could pressure central banks to recalibrate monetary policy, particularly if inflationary pressures persist despite tightening cycles. Consumer sectors tied to silver, such as renewable energy, electronics, and healthcare, may also see indirect benefits. By the way, we can't forget photovoltaic panels, semiconductors, medical devices, and also AI. That's going to be huge. It means sustained price increases could drive upstream demand. But it creates a paradox. While higher silver prices may incentivize mining investment, they also raise costs for manufacturers, potentially dampening end-user demand. Yeah, there's going to be some of that, but I don't think it's going to be enough. I think silver would have to be north of $50 for that to really have any significant impact in my view. Now, the CFTC data reveal a market at a crossroads. Non-commercial traders net positions, long positions of 59,407 contracts, up from 58,194 the previous week, suggests growing confidence in silver's ability to outperform fiat currencies and equities. Boom! That's big news. But the overall market remains net short due to commercial hedging, a reminder of the delicate balance between the speculative optimism and industrial pragmatism. So there is that angle too, so we have to keep that in mind. For investors, the key takeaway is to need to rebound to balance exposure to inflation-linked assets with diversification across sectors. Silver's speculative surge may indicate a shift towards hard assets, but it also carries volatility risk, as I had mentioned. A 20% drawdown in silver's prices over the past 12 months highlights the importance of a position sizing and hedging strategy. So that's definitely something to keep. Is this a bellwether for capital flows in a post-recessionary world? I think particularly so, especially that some of the uses for silver are recession-resistant and maybe even recession-proof, especially with areas where government really wants a lot of investment, such as green energy technologies, AI, and the like. So there you go. I think it's looking good for silver either way. Notwithstanding, make your own decisions before you buy silver. But one thing is for sure, the one thing I can say with utmost confidence is I think you should hold on to a large portion of your silver stack if you can. I think it's vitally important not to let go of too much of your silver, no matter what. Having those diamond hands is actually crucial at this point in time. So let me know what your thoughts are about this. A very fascinating and encouraging news story for sure. It's looking good for silver, folks. Even if we see a couple more days, or even if we get into the summer doldrums and we have 2 months of silver's price remaining relatively flat, I still think it's looking good for silver, and I'm sticking with my $41 silver an ounce prediction by the end of the year. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.